Do not trust here. President Donald Trump has proposed significant changes to the U.S. tax system during his second term, focusing on reducing or eliminating certain taxes.
The tax cut bill.
And extended previous, tax cuts. So here are the key aspects of his tax agenda. The elimination of specific taxes, right? Trump has called for the removal of federal taxes on tips, overtime pay, and Social Security benefits. This proposal aims to provide financial relief to workers and retirees, though there are uncertainties about whether this would include both income and payroll taxes. The permanent extension of 2017 tax cuts, right? Trump seeks to make the Tax Cuts and Jobs Act, TCJA, permanent, which would decrease federal tax revenue by $4.5 trillion over the next decade. This includes lowering corporate tax rates further and eliminating estate taxes, right? We have new deductions. So his plan includes creating a deduction for auto loan interest, specifically for American-made cars. Tariffs as revenue replacement. Trump has suggested abolishing the IRS and replacing income taxes with revenue generated from tariffs on imported goods. He claims this approach would raise sufficient funds to eliminate individual income taxes entirely. Now, here are the main arguments against Trump's tax plan. The number one is the increased federal deficit. So Trump's tax proposals, including extending the 27 Tax Cuts and Jobs Act, are projected to add trillions to the federal deficit over the next decade. The TCJA alone increased deficits by 248% since its implementation. Critics argue that deficit financing could lead to higher interest rates and long-term economic instability. We do not want any of that, right? There's the disproportionate benefits to corporations and the wealthy. So the TCJA primarily benefited corporations and high-income individuals while providing modest relief for middle-class families. So proposals like abolishing income taxes or creating new exemptions like the, that for tips and Social Security income are criticized for favoring wealthy taxpayers while offering limited benefits to lower-income households. The tariff-based revenue concerns, there are concerns with that. So Trump's reliance on tariffs to replace income taxes is seen as economically distortive. Tariffs increase costs for businesses and consumers, reduce economic growth, and invite foreign retaliation. So studies estimate that foreign retaliation could offset 2/3 of the long-term economic benefits of Trump tax cuts. The minimal economic growth impact. So evidence suggests that corporate tax cuts under the TCJA did not deliver promised investment or wage increases. So companies primarily used savings for stock buybacks rather than reinvesting in workers or infrastructure. So long-term GDP growth from Trump's new proposals is estimated at only 0.8% with negligible benefits for middle-class households. The regressive effects of consumption-based taxes, proposals like abolishing income taxes in favor of consumption-based systems like the tariffs or the fair tax, are criticized as regressive, disproportionately burdening lower-income households who spend more on consumer goods. We have the expiration of key tax provisions. So many provisions of the TCJA are set to expire at the end of this year, potentially leading to higher taxes for middle-class families unless addressed. So critics argue that Trump's plan fails to adequately tackle this issue while focusing on benefits for corporations and high earners. Now, how might Trump's tax cuts affect small businesses, right? Because that's the body of American economy. So 20% of small businesses deduction, right? The Tax Cuts and Jobs Act, TCJA, introduced a 20% deduction for pass-through entities, right? So proprietorships, partnerships, S corporations, which has benefited millions of small businesses by reducing their effective, tax rates. Extending this deduction permanently could create up to 1 million new jobs annually and boost GDP by $75 billion per year. Increasing the deduction to 25%, has been proposed, which would further lower tax burdens for small businesses earning up to $200,000 annually. Now, the lower corporate tax rates, so small businesses structured as corporations benefited from the corporate tax rate reduction from 35% to 21%. Proposals to lower this rate further to 15% could enhance competitiveness and profitability for small corporations. economic growth. So the DCGA provisions has been linked to increased domestic investment and entrepreneurship, potentially fostering a more favorable environment for small businesses. Now, here are some negative impacts, right? Healthcare costs. So cuts to programs like, Medicare, Medicaid, and the Affordable Care Act, ACA, to offset tax reductions could increase healthcare costs for small business owners and employees. This is significant because healthcare costs are consistently ranked as a top concern for small businesses, right? There's the favoritism toward large corporations. So critics argue that the TCJA disproportionately benefits large corporations over small businesses. So large firms can exploit tax loopholes while small businesses face the complexity of compliance without similar resources, right? The expiration risks. So many TCJA provisions benefiting small businesses are set to expire again by the end of this year. So if not extended, small businesses could face higher tax rates up to 43.4% and lose critical deductions, leading to reduced investments and job losses. There's tax-related costs too, right? Trump reliance on tariffs as an alternative revenue source could increase costs for small businesses reliant on imported goods, straining cash flow and limiting growth opportunities. So, there's a lot of things going on right now in the business world, the tariff world, all the things. Please let me know your opinion in the comment section below. Like, what do you think of this? Do you like this approach? Do you not like this approach? Let me know in the comment section below. If you want more videos like this and you appreciated this video, please hit that subscribe button and that like button. If you appreciate this video, you want more videos like this, you want more in-depth videos like this, and you are satisfied and entertained, let me know right now by hitting that subscribe button and the like button. I appreciate your viewership. Stay safe and see you on the next video.